Well, that's the day so far. You're with us here on a fresh new edition of Closing Bell, the last hour of trade today and this week. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Surbi here. Nigel is joining us from the newsroom floor as well. And it's a quiet Friday. So, no real fireworks up or down. And I think we're slowly being lulled into, not sleep, at the end of the session.
Into the weekend.
Into the weekend, which is nice, right? I mean, it's not, BP is not shooting up and down based on what's happening. It's just 10 points. And it's been that way. I mean, actually, the Nifty intraday will tell you that. It's been that way from the very morning. There you go. Nothing at all.
But,
so, 22 to 20.
But might I add, Prashant, lulled into the weekend in a positive, benign light, right? Because overall, this market has survived quite a bit this week. And I mean, for what it's worth, it's still 22,200 on the board.
Oh, yeah. No, absolutely. I mean, so just to put those points on the board, right? And we were saying in the morning that maybe the market preempted some of the rally from overnight because NASDAQ futures were trading, right? So, and for the last, not 48 hours, but maybe a little less than that, the only thing which many in the market have been watching is, of course, what NVIDIA will be able to do in terms of, helping the US market rally. And we got that rally. So, and the market here rallied from the lows in a very powerful way. The Sensex rallied, I think, about 800,000 points. The Nifty rallied about 200 points. So we got part of that move yesterday, a large part of that move yesterday. The trajectory, though, because the market did not break the lows, it did not go to the 20-day moving average, which stands at about 21,800. We stopped short by about 60 points. The trajectory broadly remains higher. Target's about 22,500, 22,538. Bank Nifty is lower. I mean, that index continues to struggle. There were 1 or 2 days, 3 days, 4 days of gains, a flicker of hope, but that's largely out. And the index still remains below. Day before yesterday's high, which is 47,363. There was that big red candle. And mid-caps and small caps are doing just fine with about 0.5% in gains. Reema.
Well, since you spoke about IT and the NVIDIA-led rally, it's fading off now. The Nifty IT index is actually in the red now. And from the day's high, it slipped close to about 1%. So it started trade higher, significantly higher. The Nifty IT index was up, 0.5%, but now it's lost its way. And this week itself, the Nifty IT index has a cut of close to about 1%. There are hardly any indices which have closed in the red this week, but IT has actually been one of those indices. In fact, it's been the worst performing index so far this week. PSU Banks are also under pressure today. So the Nifty PSU Banking Index has a cut of close to about 1%. But other than that, you aren't seeing any big moves, at least in the large cap, on either side. There are no big, 5% kind of moves that you are seeing today.
No, that's true. Even in the mid-cap space, you don't have a wild galloping PSU rally, for instance, but you have incremental gains. And what this week has also taught us that for PSU stocks, there are still takers. The dips are still getting bought. And we're seeing that play out once again today. Look at Realty, look at BEL, look at Hudco. A lot of these names, Aircon, RVNL, are they rallying 15, 20%? No. But there's green. And every time there's been a cool off, we've seen, fresh set of buyers come into the stocks. By the way, Indus Towers is doing so well. Vodafone Idea, and this, of course, on the hope that Vodafone Idea is going to somehow manage its way, get some capital once they get through that board meet next week. And the rub-off effect is playing out on Indus as well, 70% higher there. So these are some of the big ones. Lemon Tree Hotels has been doing pretty well from the broader market. So these are some of the key gainers. Let's not forget, Geo Financials has had a phenomenal day as well, 12% higher. So all in all, you look beneath the headline indices, there's a fair amount of action there. Nigel's, of course, also with us. I don't think Nigel is ever lulled into the weekend. He always kind of rages into one, right, Nigel?
I could hear you all, Surbi's describing stocks as wild moves and all. I was thinking we're getting set for the weekend. So, but we've got 59 minutes to go,
guys. Can't beat you.
That's true as well. But among all of us, I think Prashant is actually the party boy. He's keeping it calm, but when he goes for it. But we'll talk about that at some other time. For the time being, let's focus on the markets then. And let's get in our guests actually to give us a quick view on, how things. I think Mitesh is with us. Mitesh, what's your view in terms of today's trading action? We spoke earlier today, and as we speak, the Nifty is still almost at the same level. Your take?
Good afternoon, Nigel. I think, you're right. It is surprising given the fact that we had strong global cues. We were breaking above the previous hourly pivot and we kind of failed to build upon that. I would still watch, getting past 22,270-80 zone. If we can do that, I think then there might be some spark on the intraday charts and we might see pickup happening. The culprit here is the Bank Nifty. Again, the Bank Nifty needs to get past 47,100. I think sustenance about that should add fillip to the Nifty. So both the lessons we are wait and watch more. We've kind of reduced our long exposure on the index. And on the stock side, I have a buy on SBI Life. That's a stock which is broken into fresh eye finally and is showing some momentum. So buy here with a stop at 1,500 for targets of around 1,600. And the other one which I like is Shriram Transport Finance. That's a stock which when the intraday charts are showing good traction and we have a buy signal here. So keep a stop below levels of 24 or 25 and a target of around 2,510 can be looked at.
Okay, let's get to then some of the big movers of the day. And Vodafone Idea clearly tops the chart, surging in trade ahead of a board meeting on the 27th of February. Now, the Aditya Birla Group Chairman, Kumar Mangalam Birla, emphasized yesterday when he was inaugurating the paints business that Vodafone Idea is looking for a partner. Listen in to his comments.
We remain very committed to Vodafone, and like we've said in public domain, efforts are on to get outside investors. And I don't know what's prompting your question. I think we remain as committed to it as we have been in the past.
Okay, that's Vodafone Idea. Today, it's up close to about 9% right now as we speak, 23% up this month and 165% rally in the last 1 year. In fact, just 31st of March 2023, 11 months ago, the stock had hit a low of 5 rupees 70 paise, and since then, we've seen the stock continue to do up. Now, as we highlighted, board meeting on the 27th of this month, that's next Tuesday, where they will consider a fundraise, which could be via various options, QIP, preferential right issue. Now, the key will be the quantum of fundraise. The company has had an enabling resolution to raise close to about 20,000 crore rupees for a while. It's been unsuccessful so far. So how much they raise and if the promoters are going to participate, because Kumar Mangalam Birla in the past has said the promoters are committed to the business and they'd even indicated a willingness to invest up to 2,000 crore rupees via this. Why is this so important for Vodafone Idea? One, the debt is very high at 2 lakh crore plus, and two, the company, because its lack of 5G presence, is losing rapidly subscribers. So the subscriber market share of Vodafone Idea continues to dwindle, come under pressure. So the company needs to do a large fundraise to start investing in 5G and rolling out 5G. Now, Citi says the promoter participation will be key if the fundraise is done via rights issue. A successful fundraise will be positive for Industars, then the receivables get cleared, but it could weigh on the near-term sentiment for Bharti Airtel depending on the quantum of fundraise. So good news, but it really depends on how much they raise. Prakash Diwan is now with us on the show. Prakash, Vodafone Idea not really, it's not on the investors' radar so far. So first, if you want to comment on that, what would be an acceptable fundraise for the market? And on Bharti Airtel, the cut that we're seeing, is this just a 1 or 2 day kind of dip that even if Vodafone Idea raises money, it's not really going to hurt the trajectory Bharti is on?
Good afternoon, Rima. So I do agree, the revival of Vodafone to a full-fledged third slot player from the marginal status that it has currently does kind of, mean that there will be a little bit of competitive intensity. But then, a price hike is something which all players, all incumbents in this space are ready for. And as soon as that happens, all of this talk on the competitive intensity going up potentially, if Vodafone were to start, flexing, will actually not hold so much of water, because a price hike at this point in time is a logical thing for the growth of all these players. Particularly Bharti has been indicating that they are ready to do that sooner than the others, and I'm sure Jio will follow suit. So it's not that this is going to make a big impact, but sentimentally it kind of starts putting Bharti into a spot where they will have to start looking at expanding even more aggressively if they were to retain market share or the incremental market share that they. Now the Vodafone fundraise is still something which we are kind of anticipating, the market is anticipating, the behavior of the stock tells you that there is something in the offing. We really don't know in terms of what kind of a strategic partnership or financial intervention would come through. So once that happens, then you'll probably have more clarity in terms of valuing it. At this point in time, it's more like a hope trade. Something comes up, it'll probably survive and go ahead. But the 2 lakh crore plus debt is a huge task. It's not something which is going to get covered in just one fundraise necessarily. But it does pave the way for them surviving and starting to looking at cash flows at some point in time, 12 months down the line. So that's what the market's penciling it. But I think that closer to 18 rupees, it's probably pricing in a lot of the good news. I would not believe that just because there's a fundraise that things would change dramatically for Vodafone. The stock will kind of take some time to consolidate, even with that good news coming.
Prakash, hi, good afternoon. It's in a way it's been a week for the Aditya Birla Group, right? In terms of news flow, they've really dominated the headlines. It's Vodafone today. Yesterday, we were talking about Grasim. Before that, it was Hindalco and them, looking to list Novelis in the US. On Grasim, I just want to, get your take on what this is going to mean. I mean, even today, Asian Paints is the weakest link on the Nifty. It's down about 1% or so. Now, from here on, would you make any changes in terms of any holdings that you may have on the paints side? What would the advice be to someone who's holding an Asian Paints and who's kind of been waiting by patiently for it to get out of the funk that it's in, and then comes the Grasim entry?
Good afternoon, Surbi. So yes, I do agree. While the Birla Group has been in the news for the last few days, all the news items do connect to Vodafone for some reason. Whether it was the potential fundraise in Hindalco through Novelis, or whether the mention during the Grasim, the Birla Opus launch to be committed to Vodafone, and today, of course. So it's something where the market is trying to seek some sort of a method in the madness in terms of where things could lead to this. But on Grasim and Asian Paints particularly, while Asian Paints is probably the top on the losing side today, it's just about 1% plus. So whatever damage had to be done is probably being done. The market's now digesting the fact that Grasim is mentioned, the Birla Opus segment is going to be talking about a 10,000 crore kind of a revenue going ahead, and it's not immediate. The other thing they very clearly talked about is, while not notifying the pricing, but the price points could probably impact much of the smaller players, not so much of the leaders like Asian Paints who are in the premium segment largely. So I would believe it's going to be a battle for market share, which might not impact Asian Paints so much. The leader tends to always kind of grow when competition grows, for the simple reason that they have a head start. They could do things which a lot of the marginal players cannot, which means the market size would grow. So at the end of the day, I don't think Grasim has plans to go into eating the Asian Paints market share or grow at the cost of that. So Asian Paints has had a little bit of a slowdown given other factors, the demand side and all of that, which I think would change. And if that changes, it changes for everybody. So I would believe it's a good time to buy into Asian Paints on the long run. It's a very pedigreed business, has great strengths, and I don't think it is going to get so destabilized so soon just because there's another large player coming into the market.
Okay, all right, got that, Prakash. Stay on. We have more questions for you, but we do have to take that first break on the show. We'll come back on the other side, continue looking at what's moving in the market. And we will also have with us Trideep Bhattacharya, CIO Equities at Edelweiss Mutual Fund, with a perspective.
Welcome back. Quiet day so far. It's flat on the Nifty and the Sensex. Midcaps, though, are doing much better today. The Midcap Index is a gain of close to about 0.5%, and it's picking up now. But Goldman Sachs has come up with their call on the financials. Abhishek joins in with the details on that. Abhishek.
Well, Goldman Sachs has written a note on financial sector in India. So they believe that Goldilocks period is over in the near term as headwinds are emerging right now or increasing. So they have mentioned about few headwinds, which include rising pressure on cost of funds because liabilities are coming in at a cost and there is liquidity crisis as well. Structural challenges in funding environment, growing concerns on rising consumer leverage, which they believe is a concern, and there is potential asset quality challenges, particularly in the unsecured segment. So pressure is there on operating cost as well on account of the fact that there are wage revisions happening at the higher end, and there is need to expand distribution network for future deposit growth for the banking sector. However, they believe that the sector valuations have been at a comfortable level and nothing too risky per se. They have downgraded SBI to neutral, ICICI Bank to neutral, and Yes Bank has been downgraded to a sell rating. They have upgraded Bajaj Finance to a neutral rating while they continue to maintain their buy recommendation on SDFC Bank. Back to you.
Okay, thank you very much for that. SBI, ICICI Bank, those two heavyweights downgraded. Prakash, do you want to comment? Everyone's very bullish on the banks because there is relative value. But here you have Goldman Sachs saying the Goldilocks period is over. Is this going to be one of those rare brokerages which is going to be cautious on banks? You're on mute.
Sorry. So I'm saying it really doesn't matter or doesn't harm much if you tend to be cautious at levels where, you know, some of the stocks have done too well and risen very quickly in a short span of time. But most people who believe in the banking financial services space are counting on the kind of growth that this sector would have correlated to the growth of the GDP itself. If we are likely to see private capex, the cycle on the private capex side get initiated, move from the public sector to the private sector, there's no reason why some of these banks will not be able to grow the credit books in a way that's qualitatively good and also pass on the higher costs. And possibly, middle of this calendar year, we are going to start talking about, a change in the rate cycle itself, or we could be probably peaking out in the interest rate cycle that we are in, which means that there could also be improvement in margins subsequently. So it depends on what your horizon is. Probably, tactically, there's not much left. In the next 3 to 6 months, there could be consolidation, sideways movement, but there's lots of banks which are doing replicating the same playbook as SBI has done in the private sector. And we've seen POB do that. Now we've seen Canara Bank do it. And some of the banks like Canara Bank have amazingly high metrics on, ROA and, the kind of unlocking of value potentially that's possible from the subsidiaries and all that. So given that, I think it's going to be difficult to have a broad brush kind of a strategy on banks and say, oh, if the good part's done or, the Goldilocks scenario is over. I would believe there's still room to pick some, hold on to some, if not too many, and then ride the curve. So there's always that bottom-up potential that exists. To my understanding, on the private sector side, ICICI would probably play a catch-up, and on the PSU side, Canara Bank definitely stands up.
Prakash, Indiabulls Housing, I don't know if you've thought about this one or you're tracking this. They completed a rights issue.
Yeah.
Any thoughts at all? It's back above 200, I think, for the second time after 2020. Is there any sort of scope for re-rating? The other one is Indiabulls Real Estate. I'm not sure. I don't know if you're hearing anything there. Any thoughts? These two names.
So good afternoon, Prashant. So, Indiabulls Real Estate is the one that had lots of issues related to the acquisition that was to be made by the other company, which kept on getting, pushed down the road for various reasons. We never found any clarity in terms of when that's going to happen. But given the fact that they still own and sit on an asset book, which is arguably one of the strongest, one of the biggest and most lucrative, and by the way, the values of most of the parcels would have actually gone up. So if they have the ability to convert that into realizable inventory over the next 2, 3, 4 years, definitely there's no reason why Indiabulls real estate cannot start coming into its own, into the kind of stage that we are all looking at or expecting some of the real estate players to do. You look at the DLF, you look at some of the South-based players, you look at some of the Mumbai-based players, all of them have done very well in terms of the same, transition. Indiabulls real estate has probably been held back for various reasons, but if that has to go, things would be different. On the housing finance side, I think they are very well poised to start focusing on their core business. The revival seems to be imminent. The rights issue was a bit complex, probably given the fact that they were not too sure of how it would get responded to. But, so that's why there were lots of partly paid calls that were to be made to complete the entire rights proceeds. But that's happened quite well, I would believe. And going forward, Indiabulls Housing Finance will probably be one of the fastest growing housing finance companies in that space, in that slot which they have, which is slightly mid-sized, loans are not either very small or very premium. But housing finance as a space, I think, has amazing headwinds ahead of us. And if interest rates were to start peaking out, you'll see probably a very virtuous cycle getting initiated beyond that. So, from that perspective, the next 2 years look very promising for most HFCs. Indiabulls hasn't participated. Indiabulls Housing Finance hasn't participated. It could probably play catch up there. So that's the rationale. But otherwise, I haven't heard anything specific that makes it attractive to go ahead and buy it today. But that's theoretically what seems like happening from the information that we have on the ground.
Okay, all right, Prakash, good speaking with you as always. Thank you very much for taking out the time and being with us. You have a good weekend, and we look forward to connecting next week. Let's now move on and get you some interesting views coming in on the Indian market. Jefferies' Chris Wood, in his widely followed Greed and Fear note, has said that India looks like the best equity story in the world over the next 10 years. Hormaz is here to get us some more details from that much-followed report. Hormaz, over to you.
Now, for those who are followers of the Indian markets and have some sort of attachment towards it, here's something that will make your day. Now, Chris Wood of Jefferies, as you just referred to in his Greed and Fear note, has mentioned that India is the best equity story in the world on a 10-year view, a full decade. Now, that's enough to make your day, I guess. But then there is more that he has spoken about as well. Now, first up, he talks about India's GDP, where he mentions that it is realistic to assume a 7% real GDP growth and a 12 to 15% earnings growth going forward. Now, if India is the best equity story from a 10-year view, it is only apt that its markets will do well. And Greed and Fear is projecting that India's market capitalization will hit the $10 trillion mark at the turn of the decade from the $4.3 trillion that it currently stands at. That's almost 2.5 times from current levels. Another thumbs up there. But Chris Wood is lamenting the fact that despite the general consensus emerging for India among many global investors, some of whom have not even invested in the country, India's market does not command enough weightage in the global indices. Now take a look at this. Now India's weightage in the MSCI AC World Index is at 1.8%. In comparison, it has a weightage of nearly 29% in the Greed and Fear's global long-only portfolio. Now, the extent of India's market doing well is evident from this table, which shows the rise in market capitalization of India's companies. Now, the number of companies with over $1 billion market capitalization has almost doubled over the last 5 years. And same is the case for the $5 billion and the $10 billion bucket as well, where the number of companies have doubled over a 5-year period. So what is the biggest risk in this market? The biggest risk is that there is no risk at all. Now, Wood mentions the same thing, that the biggest worry is how well the market has done of late. Now, their long-only India portfolio is up 75.5 times in US dollar terms since March of 2023. Now, compare that to the MSCI India index, which is up nearly 40%. Now, what is the other area of concern? Of course, there is the broader market and their valuations. The Nifty Midcap Index is currently trading at almost 26 times one-year forward earnings. Compare that to the 20.2 times that the Nifty is trading at. But they want you to look at the valuations from the context of acceleration in growth in reaction to the pickup in the capex cycle. Now, another sector where Greed and Fear is focusing on is real estate, and 19% of their India portfolio is in the real estate stocks. The India unit of Jefferies has been bullish on the real estate space for a while now, and Greed and Fear believes that this is the third year of their property upcycle. Now, what is also in an uptrend is State Bank of India, where Greed and Fear is increasing its weightage in the Asia ex-Japan long-only portfolio by 1 percentage point. And where will that come from? Of course, by trimming their investment in HDFC Bank, which has been an underperformer. So the big takeaway, India is the best story for the next 10 years. 10 trillion in market cap projected by the end of the decade. If you are an India market watcher, there is nothing more you can ask for, but then there is always scope for a little bit of more greed, isn't it?
As long as it's laced with some fear as well, I think that's what makes it perfect. Hormaz, thank you very much for very, very interesting coverage of that note. But I remember, I think Chris Wood was one of the very early movers on real estate for sure. I think Jeffries really called it out well ahead of many others.
No, he did. And he's also been, since 2014, he's been a big backer of the policies of the government. He's kind of consistently said. I was just thinking that if you remember the Sanjeev Prasad note last week.
Perfect bull and perfect bear.
No, it was a play on greed and fear. It said, what did it say? All greed, no fear. That was the title of that note. Tridi Bhattacharya is with us. He's a CIO at CIO Equities at Edelweiss AMC. Tridi, good to have you with us here. You heard my colleague Hormaz outlining that note. Just your impression, first thoughts on... I mean, the common consensus seems to be the only thing which could keep things... hold us back, hold the market back a little bit is the already sharp run-up we've seen valuations. Otherwise, you give it time and the runway is pretty good over the next couple of years.
Yeah, I think what at India Observer as portfolio managers, what we need to keep an eye on is basically earnings. As long as earnings come, markets are a slave of earnings. As long as earnings keep coming, you will see the markets do well. If you look at the last couple of years, and if you look at the earnings growth of India versus that of, and compare that with what you've seen globally, you would see that the relative earnings upgrades have been the highest in India. Likewise, while people complain about mid and small cap valuations, if you look at the last couple of years, the earnings growth of mid and small caps have really ratcheted up, and the earnings growth within India has become fairly broad-based, which is why you've seen broad-basing of stocks that have done well over the last couple of years as well. So the lead indicator to all of this, as I keep saying, is basically earnings. As long as earnings are doing well, whichever pockets they do well, it will follow investments not only within India but also globally.
Okay, all right. Hi, Tradeep. Good afternoon. Good to see you in. Tradeep, on this PSU Banks versus private banks, where are you all placed? One of them, which is the private sector banks, if someone told you some of these large banks are going to get it at 2.2 times price to book, they look delicious and yummy. The problem is in the near term, there still could be some kind of a scruffle for deposits. While the PSU banks, well, they are looking pretty good, but maybe the ratios are hitting a peak out there. The credit cost, the ROAs. How would you go about things from here on? Would you be allocating money to both, or is there a preference?
I think over the last 1 year, we have increased our PSU bet with regards to not just within banks, but across a multitude of PSUs across different industries. Because in some industries like defense, I would argue that the PSUs are better positioned than some of the private sector players, because that's where they have been putting a lot of attention to. More specifically, within banks, we are at that stage of the cycle where asset quality concerns are hardly there. Lending growth is picking up from a small base. And hence, from that perspective, all the banks, whether it is public sector banks or private sector banks, are looking good. And in that context, the set of the banks which took the bigger hit was the PSU banks, and hence the growth rates and all of these things are looking well from PSU bank standpoint. And add on top of that the near-term issue that you mentioned, that from a loan deposit ratio position, they are the best positioned as we speak. And over the last year or so, factoring all of this in, we've actually increased our weightage in PSU banks, particularly towards the mid-cap ones. But if you ask me from here, but over the next 12 to 18 months, I think that's what will probably rule the roost. And that's where we are actually kind of, focusing on. Incrementally, a little more selective within banks and NBFCs. Actually, between banks and NBFCs, we are a little more positive on NBFCs, because at some point in time, over the next 12-15 months, when rates do come down, they would actually stand to benefit from that. And hopefully we benefit from the same as well. So a long-winded, broader answer for your question, but hope it helps.
Tradeep, afternoon, and thanks for joining in. What about real estate? We just heard, about Chris Wood. He has a 19% weightage in real estate, and he was one of those, the early ones who called this bull cycle in real estate. Now, the question is, Off late, the cycles are getting smaller and smaller. Does the real estate cycle have a lot more steam left in itself? And, real estate is not one big sector, right? There are so many micro markets. Which one would you bet on? What's looking attractive?
Yeah, I would say that we are in the middle of a 5 to 7 year upcycle in real estate, and that is after almost a 10-year downward cycle that we saw, and after having seen a lot of consolidation driven by RERA and regulations like that. The first half of the cycle is kind of done, where the builders have done really well. I think the second half of the cycle, where the ancillary sectors like building materials, tiles, sanitary ware, these type of companies haven't done that well. And as the later stages of the real estate cycle comes in, those are the areas where probably kind of, there is more alpha to be made over a period of time. But real estate as a sector is something that we have been bullish on for the last couple of years. And we've actually kind of, added on to that, particularly on the ancillary sectors over the last year or so, along with IT, which is what we've done over the last 2 or 3 months.
Okay, so that is the view on real estate. Pradeep, hi, good afternoon. So technology, the buzz is all around NVIDIA. Of course, we have no direct plays, and that's not the kind of technology services that we have here, in India in the listed space. But what is your overall view? I mean, are you looking at the large caps anymore? And incrementally, sort of, what's the house position at this point in time when you're looking at tech as a whole piece?
So I remember last time when I came across and we talked about the yearly view, we said that IT services would be a dark horse of calendar year 24. And in sync with that, over the last 2 or 3 months, we've actually turned overweight on IT. It worked out nicely in the last quarterly result season, but this is just the beginning, in the sense that we expect the earnings to gradually bottom out over the course of next 3 or 4 quarters, and not to do anything great. But we expect the global growth to bottom out this year and rebound next year. As a play on the same, I think technology sector could be an interesting place to place bets on, particularly this year. With this thought and view, we've also launched a NFO, which is more global in nature, with the 70% India component, 30% global component, where we can play some of the ideas that you mentioned as well, particularly the US listed ones. Because we think from a 3 to 5 year perspective, if you take a slightly long-term view, which I think all the equity investors should take, IT services, after having seen a good round of downdraft post the supernormal earnings that we saw during COVID, is now in the phase of bottoming out, I would say, from an earnings standpoint. And as that rebounds over a period of time, we think there are better days ahead.
Okay, Srideep, we'll leave it there. Thank you very much for joining us and running us through, that perspective. Appreciate you being here today. Well, 16 or 17 points is what we have in the Nifty, 22,234. And market breadth is looking up. 1,300 stocks are higher, 1,100 stocks are lower. It's a quiet day, at least on the indices. We'll come back. We'll get you more. A quick check on what's happening in dealing rooms. Nimesh gets us that flavor. Not just the broader sort of stuff, but also individual stocks and, of course, trading ideas coming in with our technical experts. Stay with us.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, it's an exciting trading session, so to call it. So good time to go across to Nimesh, who's joining us for D-Street Chatter. Nimesh, we're almost at the end of the trading session. The market has not moved 1 point.
I heard you exciting, which is I was wondering as to what's exciting you. But I think we're not used to this kind of market, right? Very quiet. Even the flows are quite muted. Pretty much range bound, but I guess that volatility will come up next week. We have the big expiry as well, so that's something to track. But again, volumes are pretty muted is what I understand. The trend this week was a bit of profit booking in the PSU names. We've seen a big rally, and now some bit of profit booking is clearly visible. The OMCs are down almost 10% from the recent high, so clearly that's one space which has seen some bit of profit booking, and to some extent in the PSU bank stocks as well. Some bit of selling pressure is visible in the PSU bank stocks in today's trade. Remember, there was a Goldman note as well, and they said the Goldilocks for the banking sector overall seems to be behind now. So that maybe is playing out as well. But I guess the momentum in the broader markets continue. A lot of stocks today are buzzing in the broader markets. The India Bulls twins, which the PP got listed today, that's locked at 20% upper circuit. That's led to a bit of rally in the PSU, in the India Bulls, the main stock as well. A lot of the railway stocks, surprisingly are again back in action, and some bit of volumes as well. So broader market trend continues, but a quiet day, even in terms of flows, quite muted. But watch out for next week because we have an expiry as well to face.
But stock-specific action, there must be plenty, right? So run us through that list.
So the first name is BEL. Again, big move in that stock, part of the defense pack. But now there is a sense that maybe some large global investors has bought into BEL, and that's the reason why large volumes as well in today's trade, and the stock is buzzing as well. The second name is C8, been a big outperformer in the tire name, but now the street is anticipating some corporate development in C8 very soon, so that's something to track there. The third name is Ambuja Cement, been buzzing within the cement names today, good volumes as well. I understand some HN investors are quite active in Ambuja Cement, but in terms of trigger to watch out for, I guess the big trigger would be the warrant conversion from the promoters, which has to happen before May, so that's something to track going forward. And the last one is Pidilite. While everyone was talking about Grasim and Asian Paints, Pidilite is seeing a good amount of institutional bids from larger investors. So that's one stock which has been well bid. It's a low liquidity stock, but again there is a lot of interest from the larger HNIs or larger FIs, so to speak, in Pidilite in today's trade.
Nimesh, not on your list today, but we've discussed this in the past. Indiabulls housing, some 6-7% higher. That rights issue happened finally after the earlier fundraising attempts did not happen. Anything you're hearing here?
So Prashant, the rights issue was for Indiabull housing and not for Indiabull real estate. For Indiabull real estate, by census, the last NCLT hearing also got postponed. So now it's going to happen in March. So that's one trigger to watch out for. But apart from that, I guess the street is anticipating some corporate development. And for a longest time, there is an anticipation that one private equity investor will come in and do a pref, and there will be an open offer as well. So I think that's what is keeping the street excited. Remember, the stock has actually rallied pretty hard within the real estate names from 80-85. Now it's come back to 125. So a bit of catch-up is happening from the real estate pack in Indiabull real estate.
Yeah, in Indiabull's real estate, there is that buzz. No, I was talking about Indiabull's housing only.
So housing got listed, right, Prashant?
The rights, I think there's a name change as well, Samman Capital. I guess that will also go through. Got it. Nimesh, thanks very much for that. So that's the Indiabulls names. Of course, I mean, they're not Indiabulls of the earlier years, right? I mean, the ownership has changed and it's completely different. Not, of course, with the earlier promoters completely out. All right, Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, take it away.
Good afternoon, Prashant. In a very flat market, I think, you have to find stocks which are showing some traction, and have AB Capital on the buying list. It's now heading towards the day's high. The structure on the hourly chart is good, so take a short-term trade with a stop at 184 for targets of 195. And UPL, United Phosphorus, that's STVT. Keep a stop just above levels of 494 and look for targets of 480 or maybe below that.
Okay, thank you very much for that. Sudeep Bandopadhyay, Group Chairman of IndiTrade Capital, is now with us on the show. By the way, the cuts on IT are getting a little deeper now, and most of them have moved to the day's low. So you've got, HCL Tech, which is down close to about 1.25%. TCS is down nearly 1%. So now it's just extending the fall on the way down. Sudeep, thank you very much for joining in. First, wanted to get your thoughts in on, Vodafone Idea, Indus Stars. it just appears that the Birla Group is getting more aggressive, whether it's in Hindalco now, this commitment. And, Kumar Mangalam Birla has been vocal about his commitment to Idea. And it now looks the fundraising is also fairly imminent. Can someone look at a punt on Vodafone Idea, or is Industars a relatively safe bet?
Rima, you said the right word, punt. I think that's the key word here. Yeah, we know it's a fantastic brand. They've got a great customer base. They've been losing quarter on quarter. We have been seeing the loss, but still they have a significant customer base and a great brand. Of course, they need to do quite a bit. 5G is a critical need for them. They need to upgrade their systems, even in case of 4G. So there are a lot of things Vodafone needs to do to get its act together. And what they need is money. I think they've been struggling to raise money for quite some time. And at somewhere, unless the promoters commit funds, I think they are not getting fresh funds from other sources as well. Under the circumstances, what Mr. Birla has mentioned and the kind of statements which are coming out is very, very encouraging. There is a board meeting next week. And I think, if things go right and they are able to successfully conclude some transaction or get some investor, something like that, I think it's great news for, I think, the entire telecom sector. We don't want Vodafone to disappear. We definitely want Vodafone to be there. We don't want it to be an duopoly. So I think all said and done, it is a good thing to happen if the funding happens. As far as Indus, it's a straightforward thing. If Vodafone survives, Vodafone flourishes, it's good for the tower companies and good for Indus. But if I have to take a bet, and really, as you rightly said, a punt, I think one can look at a punt on Vodafone. My money is on that because I think time has come for Birlas to support and do something aggressively to rescue or salvage Vodafone.
Okay, all right. Hi, Sudeep. Good afternoon. Good to see you. And Sudeep, what about Kalyani Steels? I don't know whether you track it. In the steel sector, I've heard various comments. Sometimes the management gets very aggressive, the street doesn't like it. This particular company, that's Kalyani Steel, the street has been very disappointed. Sitting on cash, not aggressive at all. But suddenly they're getting the act together. Now they're talking about a big expansion in Odisha as well. Any view on the stock or something you like from the ferrous space?
Well, not that I've been tracking it actively because, as you rightly said, they're a sleepy kind of a company. But I think considering the promoter group, considering that there is a expectation of a metal cycle, positive cycle in metals, and if they are actually getting aggressive, I think it's good news. I don't think I will go and buy Kalyani Steel based on some statements regarding their setting up of new facilities in Odisha. But if I have to buy, I think the overall, I think in this space, it's a bit contrarian, but I like Vedanta. The way the Vedanta is poised with their presence in a whole host of metals, and the way the situation is developing in China, I don't think they have a choice but to give kind of boost to the economy, and there the metal demand will go up. And one of the beneficiary will definitely be Indian metals companies. Vedanta having presence across segments, I think is the one which is likely to benefit. They are also trying to get their act together. Governance has been a challenge. Debt has been at the holding company level has been a millstone around their neck. But I think whole lot of these things are getting resolved to an extent, at least be pushed back by a couple of years. Under the circumstances, with a positive, commodity cycle, they are likely to benefit the most. And remember, the valuation-wise also, they are probably the most attractive.
Okay. Got that, Sudeep. By the way, a little bit of a cut coming in on the indices once again, about 25 down on the Nifty as we speak. Bharti Airtel and a whole clutch of PSU stocks, actually, ONGC, Coal India, BPCL, State Bank of India, a lot of the PSUs, large PSUs, they have seen a fair amount of profit taking this week, and that trend continues even now. Speaking of PSUs, that gets us to the much talked about growth versus value debate. So let me bring in a slice of the conversation from the latest episode of Market Cafe. So I decided to actually try and get to the bottom of this growth versus value debate with the at least SBI Mutual Fund. They are the country's largest asset managers in terms of total assets under management, managing money over 9 lakh crore rupees. So I caught up with the head of equities, Dinesh Balachandran. Now, Bala, as he is more commonly known, considers himself to be a value-conscious stock picker. But are there any value stocks left in the current booming market setup? Watch this to find out where he stands on the debate and what he likes with respect to the hot pockets, whether there's any value in defense, in railways, power and PSU stocks. Typically, fund managers are either growth-oriented or value-oriented. Yeah. But we're in a market where value stocks have become growth stocks, and traditional growth stocks, which are like, FMCG, etc., they haven't performed. And HDFC Bank is sulking. So the market's kind of turned on its head, hasn't it?
Yeah. What I'll say is this, right? When you look at our organization, it actually allows multiple investing styles to flourish. And we can actually see this because I tend to be much more value conscious. When I say value conscious, what do I really mean? It means that I give greater emphasis to valuations. For me, valuations matter. So even if there is a great company out there doing fantastic things, if it is so well discovered and the valuations are very expensive, I'll stay away from investing in that company, right? Now, someone else, even within my organization, Vasan, who is our CIO, he is probably more growth oriented, and we coexist. Now, with regards to value doing particularly well over the last year or two.
When value stocks rise 300%, then what do they become?
Yeah. and sometimes this is where this whole distinction between value style and growth style sometimes is a bit superficial and artificial, in the sense that all of us, what are we trying to do? We are trying to find the highest possible growth at the lowest possible valuation with the best possible management quality. So the three pillars, when you think about it, right? In an ideal scenario, you want the best of all three parameters, but clearly that is not going to happen. So then within that, you are trying to optimize. So this labeling of stocks as value stocks or as growth stocks also is artificial.
We need to be more nuanced.
Yeah, in the sense that a particular sector might be going through a tough time where it is not showing earnings growth, and this can last for even 5, 7, 10 years. That doesn't mean that that sector will never grow going forward. This is what allows for fantastic opportunities. If you look at the power space, which we spoke about, power sector didn't show earnings growth for the last 7, 10 years because there was an overcapacity issue. But in a growing country like India, eventually demand goes up enough that overcapacity gets utilized. Then all of a sudden, you're going to see a huge need for new projects to come into place.
Which is what is happening now.
And so automatically then the earnings growth picks up for companies in this sector.
Okay, so let me ask you this, since you've traditionally been a value conscious stock picker, industrials, defense, PSUs, if you take them one by one, just very quickly, which ones do you think have now ceased to be value, and which ones do you think still offer something?
So in my opinion, a lot of these sectors actually still have enough earnings tailwinds that I think that there can still be good earnings growth going forward. So even if I don't believe in further valuation re-rating, I can still expect good returns. So for me, power, energy. Now, I'm not saying this because we just launched this energy fund. In fact, we launched this energy fund because we are convinced of this theme, right? We think stocks in these sectors have enough earning tailwind that we can still sort of expect sort of good returns from here on. Having said that, frankly speaking, when I think about the defense theme, it's a fantastic theme where you have nice tailwinds in play. But there, I am struggling with valuations. So someone who cares more about valuations, for me, I'm struggling to understand why do I pay so much. That's where I say there can be great companies doing good things. But if there isn't valuation comfort, I will stay away. So for me, a lot of the companies in the defense theme, unfortunately, or fortunately, depending on whether you are invested early on or not, have done so well that the valuations have gone up so much that there is very little margin of safety left.
And what about railway? Every day railway stocks,
so
50%,
railway,
20%.
Again, railways, like many of the railways companies, frankly speaking, I struggle to understand. How does someone justify the valuations of these companies?
Welcome back. Well, we are now just about to wind down. And as I see the Nifty, the weakest stock now is BPCL that has dethroned Asian Paints. And by the way, HCL Tech is surprisingly weak compared to a lot of its peers, down about 1.5%. Back on BPCL, stocks lost about 6% this week because the week was all about this whole debate around whether the rally has run its course or whether it has more legs or not. So let me put that to Sudeep. Sudeep, because we got a couple of these broker notes suggesting that the whole blue sky scenario that is being projected on both the marketing margins as well as refining margins, that may not last. Now, what side of the debate are you on when it comes to oil refiners?
Well, I'm not so pessimistic on oil refiners. I did see these notes where they are painting a pretty bleak scenario for the oil marketing companies. But I think, particularly if you look at BPCL, HPCL, they have both refining as well as, as well as the other part of marketing with them. And I think while the refining margins may not expand any further, the marketing margins probably are here to stay. The government's compulsion of taking populist measures is probably not there. And we did see that in the interim budget. And I don't see the government coming and asking them to reduce the oil prices in the near future. So probably the market dynamics will play, and that is what BPCL and HPCL wanted always. They are a well-managed company. The valuations, yes, they have moved up quite a bit, but they are not unrealistic to my mind. So I won't, definitely recommend a sell or put down a target which is significantly lower than current valuation.
As we come back next week, Sudeep, anything looks good to you? Looks good for more, tactically or otherwise?
Well, Larsen & Toubro definitely looks good, Prashant. I think a bit of correction here and there has been happening, but I think it's a fantastic stock even to buy at current levels. That's definitely a buy for me.
Okay. Something happening there, or you think, it's a longer-term bet?
So certain things I believe are happening also, but even if, assuming, Prashant, it doesn't happen, I'm happy to buy and hold it for next 1-2 years.
All right. Okay. Got it. I think we are sort of at the end of the session with just a minute to go, less than a minute to go. So Sudeep, will thank you here. Thank you very much for joining us here. Appreciate your time. Have a good weekend, and we'll see you back next week. The market will end absolutely flat, 25 points lower. For the week, the Nifty will end about 0.9% higher. So it's not a bad way to close the week, even though Friday did not do very much at all. The Nifty Bank, by the way, also ends about 0.8% in the green. Mid caps and small caps up for the day, and I think up for the week as well. Small cap index, okay, not for the week. Small cap index is down, but marginally, nothing. 20 points lower. And let me just look at the mid-cap index, which ends about 0.25% higher today, and for the week also is up about 0.25% or so. So that is, the long and short of what really happened today. Maybe just 2 or 3 names from large caps. So the top gainers were Bajaj Finserv, Dr. Reddy's, and SBI Life. So these are the 3 top gainers. Nothing large at all in terms of movers. And on the downside, there was BPCL, HCL Tech, and Bharti.
Well, Reliance Industries has also had a fairly good week. It's up 0.8% for the day, but for this week, it's gained close to about 2.25%. M&M is the top gainer for the week with an up move of close to about 5%. And on the losing side, it's Hero MotoCorp, which has taken a big drubbing, 8% lower for the week. But the Midcap Index today managed to close up in the green, and their Vodafone Idea was the big star.
Absolutely. The Midcap Index has had a decent week. We've seen that buy-on dips play out for the index as a whole. In fact, on a weekly basis, we got mild sort of a 0.25% gain on the mid-cap index. Talking about some of the movers and shakers from today, Jio Financial Services 11% higher. You had Vodafone Idea and, of course, Indus Towers as well. Both those stocks 7-8% higher. And names like Sona BLW did pretty well. By the way, Paytm has ended up circuit 5% today. So that is the week gone by for Paytm. A 20% recovery on Paytm this week. With that, it's curtains on this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere because our Friday special, Smart Money, is coming up after this break.